right, back with Countdown right here on Bloomberg Quint Live. 24 minutes left for the markets to shut shop. If we can pull up the S&P or the Dow futures and just show you what's happening, because our markets have taken a turn for the worse. Forget 11,550. We are close to 11,500 right now. Dow futures about 0.5% lower, so they haven't changed too dramatically. In the morning, when the Asian market started, the S&P futures were down about 0.5%. They're still down 0.5%, but we have broken, I presume, a crucial element on the charts and therefore are correcting. I think we spoke to Amar about the 11,550 mark. Sacchitanand, if I can get you, because it's worsened now and the Bank Nifty is leading the route lower, what would your stance be on either of these two key indices currently at the current levels?
Well, Neeraj, as we discussed at the beginning of the show, when the Nifty was somewhere close to 11,610, we recommended a short positions for a target of around 11,520. I see this particular move getting extended towards 11,460, 470 zone, and probably we may see this particular move getting carried forward. So if you look at the overall scenario, for the last 4 weeks, the market was holding on to one particular range, wherein 11,800 was acting as a strong resistance. On the lower side, 11,600 was acting as a very good support, and it was mean reverting within this particular range. So if you look at if you look at yesterday's opening, the opening was below this particular, at the lower end of this oscillating range, and that's why I think if you look at some of the short-term averages, the opening for the week below the short-term averages is not a good sign. So probably we may see some negativity getting continued for this particular week, and that's why we expect that there are further lower levels which are yet to be achieved. So 11,460 would be an immediate one.
Okay. So watch out for these levels. There could be some more downsides, but I don't know if the risk reward would be in your favor. However, before we talk more charts, let's try and find out what's made it to Mishika Parak's list of the Fab 4 stocks of the day. She joins in right now with that. Mishika, good afternoon. What are the Fab 4 stocks?
Good afternoon, Neeraj. So the first stock on our list of Fab 4 is Gujarat Gas, which came in with a very good set of numbers today. Their revenues are up 10% and their net profit is up 77% on the back of a higher other income, because of which the stock has gained close to 1.13% today. The second stock that we have on our list is Sterlite Tech. The promoters have planned to remove pledge from the shares of the company, and they plan to go through with the removal of pledge by the end of July 2019. The third stock on the list today is Aavas Financiers. So this is a fifth consecutive day of gains after a very strong result. The stock is up 6% and citing their volumes are 20 times their average. The fourth stock is PC Jeweler. On the occasion of Akshay Tritiya, all the jewelry stocks are doing really well, and the stock has gained about 2% today.
Thanks a lot for that. If I was just going to say Yash got prettier. All right, that's the Fab 4 stocks of the day, but let's get in some more commentary. We spoke in the morning with Mr. Krishna Kumar, Mr. S. Krishna Kumar, on various aspects of the market, the elections, the global market sentiment. He had a lot to talk about the NBFC space as well and how he's positioning himself there. Listen into that conversation.
I think the global scenario clearly from a medium term is very favorably positioned for emerging markets. Clearly, growth in the developed countries will slow down, is slowing down, and the central banks are going to be on a hold and also not reduce liquidity, rather infuse liquidity like in the Eurozone. So we are into a situation where you also have supportive central banks globally, inflation which is quite benign in spite of crude being where it is today, and that provides a lot of window for emerging market central banks to also ease and create space for growth. So that's the narrative I think we would play for the year. You would definitely have some short-term factors like a Brexit event or China-US trade talks falling apart and stuff like that, which will create uncertainty near term, open up opportunities for people to get into the markets when there is a correction. So I think that's the way we look at the global framework at this point in time, favorable to EMs and particularly like a market like India, which is expected to get into a period of the next 5 years of a new government gets re-elected again or a new government comes in. So I think the local risks basically are a little bit of slowing growth at this point in time, but our belief is that with all the monetary space and also a little bit of fiscal space that could open up in the next 1 year, we could see growth rebound into the second half of this year in terms of headline numbers. The inflation, interest rate, liquidity scenario will turn a little bit more favorable. So I think it's a good position to be in from an equities perspective at this point in time. Using the uncertainties, I think we should get invested into the markets appropriately.
Yeah. Mr. Kumar, to that point now, while the indices are doing what they're doing, prices of various stocks are highly depressed at this point. I mean, the few of them from various sectors, I mean, we've seen a drag coming in for some of the consumption-oriented names because of the disappointing earnings. Telecom as a pocket has been written off over the last few quarters, now starting to gain traction. Real estate as a pocket, had seen some interest, but now that's faded away as well. So with prices being slightly more depressed, is this an opportunity according to you?
Yeah, I think the market, although did touch a new high, the broader market, including the 40 stocks out of the Nifty, are still at much lower levels, both in terms of price points and valuations too. So that provides the opportunity. Typically, we have seen in the past that these narrow rallies give way to broad market movements, and hence our belief is that with overall recovery in the economy, we do see that some of the beaten down names and more of the value kind would see a revival in terms of interest from investors. And already you are seeing some amount of repositioning that is happening over the last 15 days, where you are seeing some of the high quality stocks losing a little bit, given that also some growth weakness is setting in. And that money is moving away into more bottom-up ideas where there is tremendous value.
Would you believe that this recovery that you are referring to would largely remain bottoms up, or do you believe that some pockets could come up as well? A lot of people I hear in conversations at investor clubs talk about the capex revival, talk about how power as a theme could move up, and almost all the rising tide will carry up all the boards. So would you believe it's very, very bottom up, or could there be themes that could at large do well?
I think, while referring to more stock selection from a bottom-up perspective, I think, the broader rally in the markets would be, the rally would be broader basically, covering a lot more sectors and stocks too. So we see a whole bunch of sectors around the cyclical space doing well. Take the infra, APC, construction companies, take the light engineering, industrials and capital goods companies, logistics. Also on the material side, a fair bit of improvement in demand and pricing outlook for the cement players after a long time seems baking in. Also, if you look at some of the metal space, something like steel and alloy steel has tremendous opportunities of growth in the next 5 years, given that we are more protected market and we have a lot of investments that could happen in the industrial space. So I think a whole bunch of sectors which have been beaten down and have been underpriced over the last 3-4 years are set for a good recovery. And that's where we would like to position ourselves incrementally.
Okay, so that's of course some conversations that happened earlier in the day as well. The markets as we speak have shrunk further, so 11,494 now, 1% lower. The Nifty Bank is the principal culprit right there. Say it's not just the banks which are correcting. Tata Motors is down another 4.5%. JSW Steel is under further pressure, and Reliance Industries, the big boy, 1343, down about 3%. That is the principal culprit for the markets doing what they are. When you have banks and Reliance looking wobbly, there's no wonder that the index by itself will also look slightly weak in trade. But it's time now to take a look at what dealings are recommending in the session today. Even more so important today, Darshan Mehta is here with his channel checks. Darshan, what are you learning?
Yeah, so Vedanta will be the nifty company that will come out with numbers today. It's down in today's trade, it's down 1.9%, but dealers expect that operationally the company probably will do better than what the street is anticipating. So Vedanta is something that they're watching out for. Consumption as a theme continues to be weak. Two companies which will report numbers over the next few days. Titan will report numbers tomorrow. It was down almost 5% yesterday. So the street anticipates that the weakness in the consumption theme probably will remain weak, and then probably both the companies will report disappointing set of numbers. And the final counter is the entertainment was down 10% at one point of time, has recovered from the lows of the day. But dealers believe that the selling pressure will probably continue in Z over the next few days.
All right, Darshan, thanks very much for that. So that's what dealers are recommending this afternoon. Just want to quickly pull up some stocks then and get some chart checks going from Amar, Singh and Sacchitanand Uttekar. So while the index has dropped more than 100 odd points, the broader market space witnesses equal pressure. A few stocks, however, that have bucked the trend have been the likes of Prasun, which is up 7%. Marico holds gains of 5.5%. 1% Beverages 5.5% higher. Birla Corp 4.5% higher. So all of these stocks on the back of decent numbers have done well. Marico for one at 358 to 360 odd. Sacchitanand, would you take a buy trade on this one?
Well, the result reaction has been really good. In fact, the stock does face some resistance close to 370, and that will be the momentum level for this particular stock. And the headroom is open right up to 380 once we see a breakout above the same. But even if you look at in this kind of a market scenario, the stock is holding on to its gains very well. So probably a stop loss can be placed somewhere close to 357, and a long trade can be initiated. The reward to risk is also sweet. This future is floating somewhere close to 361.50 right now. So I think 357 would be an ideal stop loss for the trade, and longs should be held on.
Call coming in on Marico, bucking the trend in the consumption space. The stock's now up nearly 6% in trade, and a lot of build-up actually seen for this one on the future side. From the pharma side, we've been highlighting Strides Pharma for you, and that stock was down 6% yesterday, and it's recovered yesterday's losses. Now it's sitting at day's high with gains of 7%. The numbers come out this Friday. The other one is a small cap company called IOL Chemicals. That too has shot up in today's trade. It's up nearly 6 to 7%. Avinash, if my memory serves me right, I think you had once given a call on IOL Chemicals. What's the stance now?
I think most of these API players, Navneet, should do well. I think clearly the fourth quarter has also been quite strong, and I think part of the reason has been internationally some global capacities for these products have got shut down, and there has been a shortage, and plus the rupee factor has helped them. So I would believe that in case of both larger players like Salora as well as IOL, you could see definitely a sustained interest going forward. I think for the next 2 to 3 quarters, looking at the kind of trajectory most of these API companies are doing, I would not be surprised that most of these companies could do significantly better on both the top line and earnings. And clearly IOL, looking at the kind of product mix they make ibuprofen, which is a product they export largely to the US markets. There's been a global shutdown for this product, and at least for the next 6 to 12 months no fresh capacity is envisaged. So I think they should do well at least for the next 12 months. After that, of course, it depends on how supply shortages get sorted out.
Okay, that's IOL Chemicals for you, up 7% in trade. Let's quickly get a technical view going on Strides Pharma. That stock's up 7% in trade. Sacchitanand, if I could come to you, would you take a bet, considering it's volatile? It was down yesterday and today it's recovered its losses. But still, if you look at the future side, there is some build-up which has been seen now in terms of open interest.
Well, certainly yes, but if you look at the overall chart structure, it looks more of a sideways move. I would wait for the stock to break out about 510 to initiate, some long positions. As of now, I would rather give it a pass since it has been oscillating within this band of around 450 to 500. I think, the stock has already seen a substantial jump from the lower end, and the reward to risk is not sweeter for any fresh trades. So probably a breakout trade above 510 could be considered, but as of now, I don't see an opportunity for fresh long position.
Okay, by the way, just before we take in closing strategies, keep in mind these two names, Eveready. We're talking about McLeod Russell being under pressure. Eveready is down another 6.5%, and some bit of it is pressure in the last few minutes of trade. So trading at the lowest point of the day. TV18 is trading in and around the lowest point of the day. Keep that at the back of your mind. And Dhanuka Agritech, we just spoke to the management. That too has come off after seeing a bit of a sharp uptick after the interaction, just moving down in the last few minutes of trade. But closing strategies from our experts. Amar Singh, I'll come to you first. Your top closing strategy.
I would say that one can look at Tata Chemicals. Tata Chemicals, if you look at it, this is one stock which is, I would say, still managing to hold firm today. And yesterday it witnessed a very sharp up move. So it seems that the stock definitely has formed a support level. So any pullback in this stock towards 585 levels, currently it's around 596 odd levels. So any pullback towards 585 can be used to initiate a long position with a stop loss of 574 and a target of 598 on the upside.
Okay. And Sacchitanand, your top closing strategy?
Well, I would like to trade Tata Motors on the short side. If you look at the intraday structure, we have seen a fresh breakdown from a falling or a declining, pennant. So the price target for this particular pattern is resting somewhere close to 183. The stop loss for the trade should be placed at 195 on the future side, and short positions should be carried forward.
Watch out for both these names, both of them Tata Group stocks. And Tata Motors certainly a play on the short side, according to Sacchitanand. Avinash, you've, for the right reasons, of course, people might be a bit skeptical about what's happening to Motherson Sumi or Bharat Forge, etc. right now. Globally exposed stocks, you don't want to go out there and play them right now when the US trade war, US-China war trade talks are on right now. If you had them in the portfolio, would you get out of them tactically?
In fact, Neeraj, at these levels, I don't think I would have got out, because clearly I would believe that the auto cycle could definitely improve maybe after a couple of quarters. But clearly, Motherson Sumi is one company which has got a large exposure to both the international export market, especially Europe and the Indian markets. So I think in terms of their product positioning, they are doing well. Clearly, in the near term, there could be some slowdown in their volume growth numbers, and that could impact their profitability. But I think it's also got the propensity to bounce back. So I think I wouldn't sell them at these levels. Yes, the revival is probably the uptick is going to take a little bit longer. I mean, I would just continue to hold on.
Reliance Industries is now down about 3%. The big heavyweight, they're crumbling under pressure. Sacchitanand at 1340 for Reliance after going above 1400, after a slew of brokerage reports suggesting that the stock could even bump up to 1500. Would this be attractive enough to enter into? And the other one being ICICI Bank. I believe brokerage target prices have been upped on the back of those numbers, but at 387, from a trading standpoint, what would you do with these two stocks, ICICI Bank and Reliance Industries?
Well, at the beginning of the show, we recommended ICICI Bank on the short side, somewhere close to 396. The future was quoting, and we are expecting that the price target of around 380 should be seen. I think 380 would be an ideal zone where ICICI Bank could be considered on the long side. But as of now, I think the momentum and the and the market breadth has been weakening. So probably we may see this particular decline getting carried forward in both the stock. Even if you look at Reliance, I think 1350 is where it is quoting right now, and I see that the stock has a very strong base somewhere close to 1325, 1330 zone. So probably we may see this particular corrective move extended in Reliance as well. But definitely from a buying perspective, one should wait out. 1325, 1330 could be an ideal zone where we may see this declining momentum getting terminated. So I think as of now, Reliance, fresh longs should be avoided. But 1330, 1325 could be a probable zone where we may see this entire declining momentum getting fizzled out.
Okay, Sacchitanand, before we thank you, would you carry home shorts, if any, on the index today?
Well, definitely yes. We are expecting that the market should see a further downtake. On the future side, we are expecting the levels close to around 11,460 odd. So probably more 100 points, should be witnessed in this particular move itself.
Okay, Sacchitanand, we'll let you go on that note. Thanks a lot for joining us. Well, what's bounced back today is HUL. It's once again back above around those levels of 1700, and also something like TVS Motors, that's seen gains of about 3%. Some bit of bounce back, Avinash, seen from this consumption pack. Would you venture out at these levels?
Navneet, not now. I would believe that stocks like Dabur or Britannia, clearly which have underperformed on the volume growth side, could possibly be available maybe at a later stage. I think clearly the next quarter numbers are also not going to be strong. So I think it's better to wait and watch. These stocks are already trading at fairly expensive kind of valuations.
Okay, Avinash, we'll leave it at that note. Thanks so much for taking the time out and being with us today and giving us your thoughts. Some important names to be discussed on a day when the markets have not crumbled, but certainly corrected. And from the highs of the day, nearly 1.25%, or maybe slightly more than that. But ending in the red. And by the way, the Dow futures are not as steeply lower. So keep that at the back of your mind. The mid caps and the small caps too would have corrected. I don't know if this is nervousness is coming in because we're hitting the home stretch of the election season. I think Navneet and Devina will speak about the India VIX as well and where the volatility is inched up. We didn't quite mark that today, but it'll be interesting to see what's happened there too. But let me bring you up to speed with what the large caps are doing as we wrap up trade. HUL about 1.5%. Some strength in ONGC and Wipro, but marginal, no news, the news-based moves, neither for Infosys, marginally higher. So IT's taken a bit of a defensive bent today, but a lot of pressure on some other names. Tata Motors down about 5%, Z about 4.5%. This was actually down 9% at a point of time, Z Entertainment. So this one is corrected quite a bit too. ICICI Bank 3.5% on the day of the results. Surprising really, because brokerages by and large thought it was a good quarter, or at least expected good times ahead, but 3.5% lower. Reliance 3% lower. There's weakness in Grasim, JSW Steel, BPCL. I don't think people have chosen out individual pockets for punishment. Broadly, there's a bit of a risk-off mood in the markets today, and stems out from what's happened in the commodity space with Reliance, Vedanta, BPCL, JSW Steel, all of them under pressure. What about the broader markets, Navneet?
Well, the pain continues, Neeraj, but still there were some stocks which went up maybe on back of earnings, or there was some buying momentum seen around the current levels. Let me start off with Marico. Well, it outperformed its peers, definitely volume growth, domestic volume growth of 8%, and a lot of long build-up seen on the future side for Marico, closing the day around the levels of 358. The other one is Strides Pharma. This counter was down yesterday 5 to 6%, recovers yesterday's losses and is closing around the day's high mark with gains of 7%. It also comes out with its earnings this Friday. Manpasand Beverages, a volatile counter usually, saw some buying momentum today, though cooled off from the highs of the day, closing around the levels of 113. TVS Motors saw some momentum coming back in today's trade. That stock is ending with gains of about 2.5%. And from the small cap arena, you had IOL Chemical, a company which we spoke to Avinash as well, that saw some buying, closing the day with gains of about 7 to 7.5%. And something like Wheels India saw some bit of buying. It's got a free float market cap of somewhere about 450 crore, cooled off from the highs, but closing the day with gains of 9.5%. From the IT pack, we did see some buying momentum. So Hexaware was also up and about in today's session with 1.6% gains there around the day's high mark. That's where the closing is coming at 346. On the losing side, Dewan Housing, your biggest F&O loser also for the day. Some shorting seen on the future side, closing with cuts of 13% at 115. Tirumalai Chemical came out with the numbers yesterday for the March quarter. The stock tumbled. In fact, it did have a gap down opening and also closing at day's low with cuts of 8%. Dish TV was the other one which came under pressure today. Youth selling pressure 10.5% lower. NBFC's Muthoot Finance saw selling pressure, which is also in the F&O space, and also something like Shriram Transport. That stock came under selling pressure. Also some bit of shorting seen for Shriram Transport. Look at that chart. Just in the second half, there was selling pressure, closing with cuts of about 3%. And from the sugar pack, you had Balrampur Chini, a stock which came under pressure. That's also closing around 6.5%. And usually your high beta counters on the day when market is lower, you had the Anil Ambani group companies which fell in, be it Reliance, Infra, Reliance Capital, and all those stocks. Devina.
Well, that's what you've got. So clearly disappointing close for the indices, with the Nifty banks rumbling about 344 points. The Nifty 50 not just below 11,550, it's gone way below 11,500 as well. So a deep gash that's come into today's session. Whether or not we see a technical bounce back coming in or a further dip goes to be seen as to how the global market sets up for tomorrow. But let's take a quick look at the contributors for the day. Then we move on to the broader market space and the turnover as well. This is what you've got. So IT as a pocket stood out. Few stocks like HUL consumption. So safer haven bets working their way in today's session. Losers again, the big heavyweights stacking up on in the losing end. HDFC Bank and Reliance Industries 3.5% given up. So that's a big cut coming in, because of which the index itself saw that big grind lower.
Well, in terms of India Volatility Index, which was up almost 10% in yesterday's trade, remember that also moves inversely with the market. But today, on a day when markets were down nearly 100 points, India VIX was just about flattish, closing around the levels of 26.3. But remember, it is still at elevated levels. In terms of participation, let's see how the turnover panned out for today's trade. Nifty's lost 200 points in the last two sessions. The F&O turnover picked up today close to 10 lakh crore. And for the NSE cash, it's higher than yesterday. I don't know if that BSE cash figure is right. I think we'll have to check with that. Yeah, we'll check that figure. You can ignore that.
Yeah. So yesterday was about 27,000, today about 30,000. The broader market picture, obviously, the condition worsened towards the end of the trade as well. So right up until the first half of trade, everything looked fine, while you did have a slight peter off towards the mid of the afternoon. But towards the end, it was a deep, wide yawn, with the bears taking complete charge towards the end. And, that's probably going to weigh down on the markets for a few days, because even the last few days, the broader market space has not done a whole lot much. But that's what you've got in terms of the market closing. Let's quickly get in a snapshot and a perspective on what one does as we come back for trade tomorrow morning. And I think we've got Amar Singh with us. So Amar, let's hear it from you in terms of what would the strategy be to approach trade tomorrow?
I would say that once we saw Nifty breach the 11,550 mark, the sell-off was quite sharp, and closing below the 11,500 mark surely implies that bears seem to have the upper hand and high levels will be sold into. So the next level to watch out for Nifty on the downside would be 11,430, 440 levels. So tomorrow again we could witness some selling pressure in the markets at higher levels. On the downside, 11,400, 430, that could be a level of support. Technically, the short-term trend I've been seeing for many days that there is bearish divergence, and the bearish momentum definitely has been increasing. So I would say that being on the sell side makes more sense from a short-term perspective. But sustained close below 11,500 levels would mean that there's further room on the downside for Nifty towards 11,200, 250 levels as well.
All right, Amar Singh, we leave it at that. Thank you so very much for joining us this afternoon with your perspective.
Thank you.
Markets close slightly more disappointing this afternoon.
Yeah, but as we wrap up the show, one more piece of information. The Ruyas have made a fresh bid to try and stop ArcelorMittal from taking over their erstwhile company. SR Steel Asia has filed a petition in the NCLAT accusing Lakshmi Mittal of suppressing vital facts and misleading the committee of creditors. Vishwanath Nair joins us now with the details. Vishi, what are the Ruyas alleging?
Neeraj, so according to a statement that SR Steel Asia has released earlier today, they're claiming that the ArcelorMittal group, especially Lakshmi Mittal, had suppressed vital facts and misled the committee of creditors at SR Steel India. They're claiming that through his shareholdings in certain companies where his brothers were also founders, Lakshmi Mittal has been rendered ineligible under Section 29A of the IBC. Basically, the Section 29A prohibits any promoter of an NPA firm from participating in the entire bidding process. Now, according to SR Steel Asia, they've said that Lakshmi Mittal holds a stake in GPI Textiles as well as Gontam and Pipers. Both of these companies are non-performing assets, and thereby he's ineligible under Section 29A, and by that extension, so is ArcelorMittal. What they're claiming is that before they submitted their final bid, ArcelorMittal had submitted in writing a statement saying that they have no business dealings with Lakshmi Mittal's brothers or any of their businesses, and they've not had these relationships for over 20 years, and therefore they are eligible to bid for SR Steel. According to SR Steel Asia, this was not correct, and therefore vital facts were suppressed from the COC, and that's why the COC was misled. But remember that in this whole thing, SR Steel Asia itself is party to the entire bidding process. They had made an offer of about 55,000 crore to be paid upfront to the creditors of SR Steel India, so that the case can be withdrawn from the IBC process and the company can be handed back to the Rohiyas. But of course, the COC back then had rejected this proposal of the SR promoters. Now they are back at the NCLAT. They are opposing the ArcelorMittal bid. They are saying that the ArcelorMittal bid is not valid, and therefore the case needs to go back into deliberation. Whether the NCLAT will take this matter up and whether they'll hear this this kind of argument further, that remains to be seen. But clearly, the Rohiyas are not giving up.
All right, Rishi, we'll leave it at that. Thanks so very much for bringing us that quick update. And with that, it's a wrap on this edition of Countdown from Navneet, Neeraj, and myself, and the entire team that's put this show together. Thanks so much for watching.